Hello, I'm Annabel Brodie-Smith, Communications Director of the Association of Investment Companies. Today, we're talking about infrastructure investment trusts, which have been dealt a number of challenges over the past 3 years, from higher interest rates to cost disclosure problems. But could prospects for the sector be about to change? Today, we're looking at the challenges and opportunities for infrastructure trusts this year, and I'm delighted to be joined by three managers from the infrastructure sector. We have with us Philip Kent, who's the lead advisor of GCP Infrastructure Investments, Jean-Hugues de Lamaze, partner at Redwell Ecofin and portfolio manager of Ecofin Global Utilities and Infrastructure, and Benn Mikula, CEO and managing partner at Cordiant Capital, which manages Cordiant Digital Infrastructure. Great. On to the questions. It's been a challenging time for infrastructure. What's the outlook for your trust in 2025? And I'd like to start with Phil.
Great. Thanks, Annabel. I think 2025 has the potential to be a really exciting year for infrastructure investing. I think if we look at the role of infrastructure, it really is to build assets that are going to address some of society's biggest challenges. And I think we've got quite a lot to do. Certainly from a UK perspective, if we look at the challenges around decarbonisation, we have a new government that's looking to set a new agenda and a new timeframe for decarbonisation. We've got digital infrastructure needs as the growth of AI and the digital economy grows significantly, as well as a growing ageing population and the need to develop new infrastructure to support the population dynamics. So from an investment perspective, we're starting to see policy align with some of those social needs, which is creating some really interesting investment opportunities. And I think the final thing I'll say is the macro backdrop with a falling interest rate environment, we also hope will mean that the relative attractiveness of infrastructure, which historically has been a very income-focused asset class, is reset in a lower interest rate environment.
Yes, those interest rate cuts would be very welcome. So Ben, what's the outlook for your trust?
Thank you very much, Annabel. I would be remiss in not mentioning that Cordiant manages several trusts. We also manage Cordiant Hydrogen One, but I'm here today to talk about digital, which is a truly exciting corner of the economy. Digital infrastructure is effectively the plumbing of the internet. It's the third largest infrastructure category globally after roads and power. And it's growing. The growth is robust, and there's probably a 10-year secular tailwind. That growth rate is quite independent of artificial intelligence. We've assembled a very high-performing portfolio of data centers, backbone fiber, and communications towers across Europe and the United States. We've done it at attractive prices, and we have plenty of potential to invest growth capital expenditure to extend the revenue frontier of these assets. So we're quite excited. And I would just say that one of the things we're most concerned about, frankly, is something that you made reference to, which is ending this inappropriate double counting of fees, the weight of inappropriate regulation by the FCA. But looking ahead, the outlook for digital infrastructure itself is bright.
Great. Well, we'll come to cost disclosure in a minute. But Jean-Hugues, obviously you invest in listed infrastructure. What's the outlook for your trust?
Thank you, Annabel. Yes, listed infrastructure stocks have been affected over the past 3 years, I should say, by the trends in interest rates from bond yields, and also the perception that most of those operators would struggle to pass through the effects of inflation. What is interesting and what we can see from the companies in our universe and in our portfolio is that actually the fundamentals and the outlook have not only not deteriorated, but they've actually become much stronger. And we see significant drivers of such growth and outlook ahead of us, and notably in the next year. What is interesting is notably what's happening with power demand. We're coming out of a period of about 20 years of flat electricity consumption in the major economies. Expectations are that power demand will increase by about 40% in the next 20 years. That's on the back of data centers, just alluded to it. That's on the back of electric vehicles, but also more generally speaking about a trend towards electrification, notably of the building industry. This is a major growth driver. And we believe this is going to be a driver of earnings and actually profitability, returns, cash flows for the operators in the space. So when we see the outlook, the fundamental outlook, it looks very sound. If anything, the political changes could actually even enhance it further by slowing down the pace of new capacity additions in power supply, which could actually boost power prices. That would be a further, an incremental positive factor for the space.